Hello guys, and welcome to the White Rabbit Trading Channel. Before we begin, please take a moment to read the disclaimer below. Remember, I'm not a financial advisor and everything here is for educational purposes only. And if you find this analysis helpful, please consider subscribing to the channel and turning on notifications. Your support helps me create more content like this. It's not hard for you, but it's pleasant for me. Alright, let's dive in. With the monthly close today, we have quite a few statistical levels to work with, and it's important to note exactly why they matter. First off, the month closed positive, signaling that overall momentum was upward through the end of the previous month. From this, we've derived a new monthly level along with a monthly volume block. Taken on its own, this monthly volume block is recognized as a strong area no matter which direction the price chooses to go next, because monthly data points are often more significant than lower timeframe signals. Essentially, this level can either hold firm and continue acting as support, or it can fail, effectively turning into resistance if price pushes beneath it and then rejects on a retest. Given that the price is currently above this monthly level, we'll naturally treat it as support unless or until the market proves otherwise by closing below it. Another confluence factor here is that the 5 EMA is now shifting upward precisely around the monthly level, thereby reinforcing its relevance. Let's dig into the stats for this time of year. Historically, February has shown a 78.57% chance of finishing with a positive monthly close, which is quite bullish on the face of it. Yet one crucial point about statistics is that they work both ways, so 21.43% of the time, that's 3 out of 14 total observations, February actually ended on a negative note. For those rare negative closes, the average loss was around 17.49%, with a median loss of roughly 12%. Additionally, the wicks in those scenarios tended to be somewhere around 9% to 12%. Translating that into the current price chart, such a drop would carry Bitcoin below the 90K level, indicating a notable slump if it does turn out to be one of those negative years. From a bullish perspective, we obviously don't want to see the market returning all the way to range lows, but since the data clearly shows that there's still a roughly 21% possibility, we have to keep an open mind about that scenario and remain aware of the timing that could enable such a move. Moving on to the bullish angle. Across all recorded Februaries, the average gain is approximately 26%, with a median rise of 20%, and an average smaller move on the order of 17%. In a more tangible sense, those figures would place Bitcoin at brand new all-time highs, potentially around 119K if we're looking at the smallest average move, near 122K if we go by the median, and up to around 128K if we stick to the fully calculated average. Now, the typical pullbacks or retracements to the downside in a February uptrend are around 8% on average, with a median near 3.78% and a more general figure of about 5.34% across varied samples. On the charts, the smallest average scenario might land Bitcoin around 98,497, which is fairly near our current zone if we consider historical performance. The reason for mentioning these narrower statistical possibilities is that we've observed certain Februaries where the price dipped only 0.6% or 2%, with an overall average minimal pullback of about 1.56%. That type of small retrace would put the price near 100,700, so it's important to note that this month's prospective range is quite close to current price levels, meaning only the more distinctly bearish scenarios push the market substantially outside that band. Next, let's shift focus to the monthly timeframe and the concept of a range timeframe. Previously, we determined that if we look at typical market behavior, the timescale for forming potential lows in a range is about 9 to 14 days, which is between day 5 and day 10 of February. Averaging it out, we see that February's lows often appear around day 9. During an uptrend, these lows might occur nearer to day 5, while in months classed as bullish, day 6. It's critical to remember these are averages, so the actual timing can vary. Sometimes the lows appear extremely early in the month, with only shallow retraces. However, these averages give us a reasonable time frame that aligns with the monthly data we've discussed so far. We know that in bullish Februaries, the lows frequently establish themselves in the earlier portion of the month. If the market indeed tests our relevant levels during that period and exhibits a bullish reaction, that confluence can help validate a long trade or a continuation higher. By contrast, in a bearish month, lows have been known to form later, commonly around day 15 or even beyond that point. This can be helpful in shaping scenarios. If we see what looks like a low forming early on, but then it later gets taken out as the month progresses, that indicates a higher likelihood of a more deeply bearish outcome, potentially opening the door for new lows or a move into more negative territory. That's the practical value of timing as a factor in scenario planning. At present, we're skewing bullish because the price structure is still climbing, but we've also laid out the metrics that tell us exactly what to watch for should the market flip into a more bearish posture. If Bitcoin is going to establish its low during the initial days or the first week, that could power a rally into the second half of the month or even toward the final days, assuming structure holds. Another time element is tied to the yearly cycle, given that the first significant yearly pivot is anticipated around February 23rd, aligning quite well with these monthly time windows. Whether the eventual tilt is bullish or bearish by then, that date can act as a confluence. If we're at higher prices, it may be an inflection point to watch, and if we're at lower prices, it could similarly mark a zone of reversal interest. Now let's detail some key confluences. One major factor is the monthly volume block, a zone that served as support in the past and also aligns with typical monthly retracement levels. We can see obvious liquidity in that vicinity, which captures our attention. Using a fixed range drawing tool on that portion of the chart, we notice it's right at the point of control, a metric signifying where the most volume transacted within that specified range. Beyond that, we can almost mess up the chart visually by layering multiple lines and discovering that many line up with this particular zone. A monthly EMA from our previous chart is located there, a 21 EMA is in close proximity, and anchoring a VWAP from a significant point in time also pins to that same neighborhood. Moreover, if we draw a parallel channel capturing price action from certain swing highs and swing lows, the lower boundary situates itself around that same area. Plus, the previous month's equilibrium resides nearby. And if we add in the trend lines that emerged after the market broke out from prior consolidation, they too pass through this cluster. Finally, if we overlay negative Fibonacci extensions, we find a golden zone matching up here, with negative Fib targets hinting at how the next potential upside wave could line up if price bounces from this region. Altogether, this forms a robust confluence that stands out as an extremely important area for setups, assuming price and timing converge there in a supportive way. Of course, there's always the scenario where Bitcoin simply forms a low today or tomorrow, then proceeds upward without testing this confluence zone deeply. If that happens, I'll look for confirmation in structure changes, such as consecutive higher highs and higher lows, before jumping on board. In that case, it's fine to miss out on a small portion of the move if it means gaining clarity that this actually is the pivot. On the other hand, if the price moves down into these confluence areas at just the right time window, we'll adopt a step-by-step approach, watching for signs of a reaction or bounce. And because this zone is loaded with confluences, it might be a significant gift if it works smoothly, though, quite often, the market can front-run the level, lead to choppy price action, or even poke below it momentarily, then yank back inside, effectively catching traders off guard who are too rigid on their entries. We lack that clarity at the moment and must see how price evolves. Turning our attention to the local time frame, we notice that the short setup from yesterday continues to play out effectively. Meanwhile, the long scenario I considered earlier failed to trigger a convincing reaction on lower time frames, producing only lower highs and lower lows, which discourages me from taking that trade right now. My plan is to wait for stronger confirmation or evidence of structure shifting before entering a new position. If the market continues its downward drift, and ideally does so around our target timing window, then starts to pivot in structure, say, printing higher highs and higher lows on a local scale, I'll look to get involved. The first potential area of interest might lie around local liquidity that's close to the previous month's equilibrium. If we think in terms of minimal average moves, the low could form very early, so we must be prepared to see a bounce there. Should price fail to find support at that point, I'll naturally watch deeper liquidity pools, along with confluences tied to average wick territory, ultimately focusing on the so-called end-boss order block that has the heaviest confluences of all. As soon as we spot a reaction at one of these levels, stop losses could be adjusted accordingly. Meanwhile, it's also worth remembering we have local short scenarios that remain valid, because Bitcoin still ranges back and forth. If the price rallies to around 107K but looks structurally weak, such as printing bearish divergences or decreasing volume on a retest, I might hedge or short it, since a range remains a range until it conclusively breaks. We'll just have to see what happens in the days or weeks ahead. We have our key levels defined, we've identified timing windows, and we've laid out multiple scenarios, which is precisely how we like to prepare. Summary: Bitcoin closed the month positive, forming a monthly level and a volume block. This level acts as support if price holds above and resistance if it breaks below. Bearish case: if Bitcoin follows past bearish Februaries, it could see a drop of 12 to 17%, bringing price below 90K. Bullish case: the average February gain is 26%, meaning a potential move to 119-128K. In bullish Februaries, lows tend to form early in the month, day 5 to 10. If early lows hold, price is likely to trend up for the rest of the month. In bearish Februaries, lows often form late in the month, day 15 plus, which could lead to deeper downside. If early lows break, the chances of a bearish month increase. Multiple confluences align around a key level, monthly volume block. 21 EMA and anchored VWAP. Point of control from the fixed range. Golden zone from Fibonacci retracements. This makes it a high probability area for setups, but price action must confirm direction. Trade strategy and execution plan. If Bitcoin moves down into key levels, look for reactions and structure changes. If Bitcoin moves up first, confirmation is needed before chasing longs. Short setups remain valid if price rejects near 107K with signs of weakness. Treat Bitcoin as a range until a clear breakout occurs. Final thoughts and next steps: time and price must align for strong trade setups. If Bitcoin forms a clear structure change, a trade entry becomes more favorable. The plan remains step by step, watching for liquidity grabs, structure shifts, and volume confirmations. Preparation is key. Multiple scenarios are ready, waiting for execution based on real-time price action. That's it for today's update. If you found this video helpful, don't forget to like, subscribe, and share. I'll keep you updated as the market develops. Until then, trade safe, and I'll see you in the next one.